This is not financial nor professional advice. This video is for entertainment only. Hey everyone, we have our very volatile market and it is going up, much to my surprise, in the face of Jerome Powell of the Federal Reserve raising interest rates 0.25%, which is kind of nothing. So the market had it priced in and was happy that it was only 0.25. But the problem is he's going to raise it, or the board is going to raise it 6 times more in the next year. They only meet 6 times more in this entire year. So, and now the question is, are they all going to be quarter point increases? Or if inflation gets really bad, will they resort to a half point increase? But this is all overshadowed, I think, by Russia's invasion of Ukraine. There is some hope there in the sense that they are talking about Ukraine becoming a neutral country. I think Putin might be trying to figure out a way to save face in this disaster for Russia and for Ukraine. I think if he can get out and save some face, simply because the economic consequences are becoming so severe as he's being cut out of the banking system in many ways by many countries. China might help, but I don't know if that's going to be enough. And the thing that seems to be getting to the populace of Russia is the devaluation of the ruble. Nobody wants the ruble. And McDonald's, I think, has closed its stores temporarily, they say. They don't want to say they're closing permanently because Russia threatens to take over their stores, which I'm sure is going to be a big encouragement for future investment in Russia, right? Yeah, we're going to take over your property now. So in looking over the wreckage of this crash so far, I'm trying to find some undervalued high growth stocks. And of course, the two hitting me in the face are two parts of the FANG, Facebook, now called Meta, and Google. And they both have things going for them. Facebook, they are changing to the metaverse, and they want to invest in the Oculus and the equipment that goes with the metaverse, and also augmented reality, which would make wearing my glasses much more fun. And I think that has to be developed a lot further, and I'm looking forward to that because I want wearing glasses to actually be more fun than it is. and then they also have a virtual lab where they're working on things and trying to create this metaverse more and round it out more so it's actually more usable in daily life. I think the augmented reality might be more usable than the metaverse. I don't know that I want to be shut off from reality and live in a completely different reality as much as I want improvements to the reality that I'm dealing with. And I think many people might find that. I want to be able to switch in and out and not be locked in, which might be the problem with things like the Oculus. You can do it for a couple hours at most before you get dizzy, but I think that is a drag on their results now. It's estimated that they're going to invest like 10 billion into the metaverse, which is a significant amount. But Facebook is so undervalued, and it actually has a price to earnings that makes it a value stock now. And Google is also deeply undervalued, and it has a decent price to earnings ratio. And of course, it has good earnings. What could go wrong? What could go wrong is that this is a fake rally and I'm being faked out, which is possible, but I want to sort of dip my toe in and see if it holds. And if it holds, I'll buy more of these. And also, if at the end of the day, if I don't know what to do, I usually put it into Berkshire Hathaway. And so I'm going to take a look at each of these charts and give you the rundown on each of these. Warren Buffett's Berkshire Hathaway has beat the S&P 500 handily this year. I think the S&P 500 has gone down around nearly 20% if it hasn't done that already, while while Berkshire Hathaway has gone up 10%. So he's significantly outperforming, and he's a genius investor, and he obviously has lived through a few crashes, more than half a dozen, let's say. And when I say a crash, in his case, they are severe. So where the metaverse is going is all in Mark Zuckerberg's head, and Mark Zuckerberg is saying that he wants to make Instagram an NFT marketplace where people could mint NFTs right on Instagram. So I'm sure that all has to be worked out, and I don't know how much demand there is for that, but it's an interesting concept and would make NFTs probably more available to the average person. Mark Zuckerberg is now the head of the company called Meta Platforms, whose symbol is still FB for Facebook, and it also includes Instagram and WhatsApp, plus Oculus, plus all the metaverse stuff. So there's a lot going on with this company. It's a $557 billion market cap. Its price to earnings is only 15. Wow. That is value stock territory, which is why I'm thinking of buying even more of it if the market starts to continue to go up and this isn't just a flash in the pan. Meta's price is 203 and its value is like 334, and it still has a comfortable 22% earnings growth rate. So this looks like a buy. When you look at the chart and you notice that 5-day chart, that little notch where it shows it's down below 200, that was the point where I'm asking myself, am I going to someday say to myself, gee, I saw Facebook below 200 and I didn't buy it. I didn't want to be that guy, and so I bought some, and I might buy more depending on what the price action is in the near future. Bought some Google. Its price right now is $26.65. I got it for about $26.40. Its value is close to 3,000, and its growth rate is about 30%. And its price to earnings is around 24, which is a little bit high for the type of market we're in. But I, again, want to sample it, so to speak, and probably buy more later, depending on the price action. I call it Google because that's what I've known it as most of my life, but its official name is Alphabet with the symbol GOOGL. But the most exciting news I haven't told you yet, and that's it's going to have a major stock split on July 1st, 2022. So on July 1st of this year, we're going to have a 5-for-1 stock split. I bought 40 shares. Those 40 shares on that day will become 200 shares. And I know I hear this over and over on the internet. Oh, stock splits don't matter and so forth. And I've heard that nonsense over and over. It matters a lot. They virtually always go up after a stock split, especially a major growth stock like this, because you have people that can't spend $2,000 on a stock. Yeah, maybe they can spend a couple $100 to get a share of a stock that they've always liked but have been unable to purchase. And frankly, I don't really like stocks that I can't buy at least 100 shares. And if you buy 100 shares of Google, wow, you're into major money there. So I think it'll have a successful and uplifting price effect upon the stock. And you want to know why I love Berkshire Hathaway so much? I'll leave you with this chart that shows the performance of Berkshire Hathaway compared to the S&P 500. The S&P 500 is in red. The Berkshire Hathaway is in green. Berkshire Hathaway has gone up 32% in the last year, while the S&P has gone up a little more than 7%. And that just warms my heart to a stock so much when it behaves like that. Thanks for listening and watching. Be sure to hit the like button, smash that like button, as we say, and I will see you in the future.